I'm Dan Kraus, founder of the Stock Investor Studio, and this is how to invest $10,000, the complete 2021 guide. So if you have $10,000 and want to know how to invest it, here are your options. So I've put this together because a lot of people ask me what to do if they have $10,000 to invest. And why listen to me? Because I've worked at some of the world's largest investment banks for over 15 years before starting my own business. I've worked on trading desks where I learned all about trading and investing and so much more. I was also appointed the head of a Wall Street international trading desk where I was personally responsible for overseeing all equity sales and trading operations. Also, I've managed to make myself 250% gains in the past 3 years on my equity portfolio, and at the end of this video, I'll prove it. So if you have or are close to having $10,000, guess what? You've already saved more than most Americans. A recent study found that the median American household has only $4,830 in a savings account, and almost 30% of households have less than $1,000 saved. So well done for hitting your very first big milestone. Make sure that you have targets for your next milestones, whether it be 20 or 50 or $100,000. Right, in the next 25 to 30 minutes, I'm going to share my insights and suggestions of what to do with your $10,000 savings. But first, I want to tell you very quickly about my website, Stock Investor Studio, which is an online educational and stock market website. If you want to learn all about the stock market, how to buy and sell shares using my proven strategies, and so much more, please check out my stock market course. It's on my website, which is www.stockinvestorstudio.com. And lastly, to see more of these types of videos and get my weekly game-changing stock market news updates, please subscribe to my YouTube channel. Click on the like and subscribe button below. Right, moving on. This is a step-by-step guide to investing your first $10,000. Now, I'm not going to tell you what to buy or sell. That's up to you. I cannot and will not make actual recommendations, but I can point you in the right direction and teach you the skills you need to make informed and intelligent decisions on your own. You don't need to be a rocket scientist. You don't need to be an extremely intelligent person. If it's stocks that you want to invest in and you can do some basic fundamental analysis, technical analysis, and a little bit of instinct, and screen for stocks that fit within your investment criteria, you'll be able to find stocks that fit well within your investment objectives. Now, I'm going to run through some basic steps to get you there, and don't miss my top 10 investing tips at the end of this video. But first and foremost, you have to be realistic with your investment goals. Do not think it's usual to invest $10,000 and end up with $40,000 in a few weeks or a few months. Typically, things do not go to the moon, contrary to what many investors think. Things that go to the moon take patience and time. That's what investing is about, patience. And if you choose to invest in stocks, picking good, reputable stocks to invest in is crucial. Right, before we move on, we need to quickly also talk about meme stocks. Buying them in the hope that they're gonna go to the moon is not investing. So I can also almost guarantee you that a savvy, patient, level-headed investor will outperform almost any meme trade investor over the long term. So please think wisely and don't get caught up in that mess. Very few will make money from meme stocks, right? So most will lose. Just a quick word of caution. I'm trying to help you. I'm not trying to be the fun meme police. I don't want you losing your hard-earned savings. So as a reminder, and as I just mentioned, I've created a full A to Z stock market course for beginners that teaches you everything about the stock market and investing. The link to the course is below, and in my full course, we go into a lot more detail on all the topics we're going to discuss shortly. That's it for this module. We'll see you in the next one. So we're back. This is module 2. And before you deploy or invest any of your $10,000 into any type of asset, there are a few important things to consider first. So, number one, do you have a lot of debt? If the answer is yes, I'd highly recommend that you pay off your debt first. Don't put it off. If you owe money, settle those debts. If there's any left over, then invest the balance. Pay down especially the high interest rate debt that you may have, which is like consumer debt, credit card debt. If your debt is under control, then great stuff. Number two, do you have an emergency savings fund? Before you invest into anything, it's important to make sure that you've got some money, an appropriate emergency savings fund, so that any potential investment losses won't really mess with your finances. Investing is a great way to grow your wealth over time, but when you invest in most asset classes, there is always inherent risk. So I would advise to have some cash aside in an emergency fund. I would say between 3 and 6 months of expenses at least. Keep it and don't spend it. If you have a small emergency fund and an additional 10K ready to invest, then great stuff. Number three, do you have a 401k or a Roth IRA? If yes, then great. Please keep adding to it and do not stop. If not, and you don't have a 401 or a Roth IRA, please speak to your employer or the HR department at your company and set one up. If your employer matches your contributions or a portion of your contributions, then make sure you're adding it every month or adding into it every single month. It's free money from your company. It's an obvious choice for you to make. And if you can, try max your 401k retirement account investments. That means have your company deduct the max amount of money from each one of your paychecks. Many see it like they're losing money on a monthly basis, but it's the most efficient way of saving money. So make sure you have your 401k set up and you're contributing. If you have an additional 10K to invest on top of that, great stuff. Number four, importantly, you need to consider the following factors: your investment objectives. So this is really a set of goals that you have for your overall investment. And in this instance, it's $10,000. You'll need to determine the optimal strategy for achieving your personal goals. And we're going to talk about this now. So firstly, you need to consider your age. How long do you have until you can retire? The younger you are, the more you have time to save really, and the more risk you may be willing to take. Okay, the older you are, the less time you have to save and the more risk averse you may be with your life savings. For example, a 28-year-old would typically have a very different investing strategy to a 60-year-old who's retired. A 60-year-old may be a lot more risk averse versus someone who's in their mid-20s who wants to be invested in cryptos, which are obviously a lot more risky, as an example. Importantly, you need to understand your overall risk tolerance. So can you stomach the wild swings in cryptocurrencies, as an example, or small cap stocks? And I'm not talking meme stocks. So think about how much you want to risk your overall capital if you're prepared to go into some riskier stocks, perhaps some cryptocurrencies. In summary, your risk tolerance and time horizon are two very important parts in determining your overall investment objective. What kind of investor do you want to be? Are you looking for aggressive growth, or are you a little more risk averse? These are the big decisions that you need to make, and depending on things like your age, your emergency cash pile, your overall investment objectives, among other things, should influence the way that you invest your $10,000. That's it for this module. We'll see you in the next. This is module 3. So there are a few ways in which you can invest your $10,000, and I'm going to touch on each of them. However, we're going to be focusing on investing in the stock market and stocks. Why? Because that's where all my experience comes from. I've worked in the financial industry for over 15 years, and that's where I'm best suited to give you my thoughts and my guidance and my general ideas. I'm briefly going to touch on all the different ways in which you can invest, but we'll go into more depth in the stock market section. But generally speaking, your investment options are as follows. Option number 1, bonds. Now, bonds are a debt instrument that allows you, the investor, to loan money to either governments or really big corporations or companies who need to raise capital for certain projects, right? And bonds typically have what we call a maturity date, either a 1 year or 2 year or 5 year, it can be a couple of months. And when that bond expires, you typically get back your overall investment plus interest. Now, my thoughts is that investing in bonds is a really good way of preserving your $10,000. But if you're after results, you're kind of limited, as you won't really see big returns when investing into bonds. So here's where your age and your overall risk tolerance comes into question. Now, if bonds sound like something you really want to invest in, you can buy and sell bonds through most trading and stockbroking platforms. Right, then we go to option number 2, mutual funds. Now, mutual funds and ETFs, which are exchange traded funds, are quite similar. Both trade on an exchange, and mutual funds are really investment funds that contain multiple securities and trade on a stock exchange. Now, it could be a blend of both equities and bonds or other asset classes. The main differences between an ETF and a mutual fund is that the fact that a mutual fund has what we call a portfolio manager and a number of analysts that actively monitor and manage their portfolios. They're looking for winning trade ideas. They're looking for good stocks. They're looking to decide how they want to actually manage and take profits, or when to buy and sell within the portfolio or within the mutual fund, all on your behalf, but they charge you a fee for this. Whereas an ETF is not managed by anyone. It's just a group of stocks, and you decide when to buy or sell that specific group. So in summary, each mutual fund has a professional manager that oversees the fund's performance and holdings. Now, if mutual funds sounds like your thing, you can invest into them quite easily by just buying units, just like you do stocks. Now, I like this option, especially if you keep adding to your initial $10,000 investment and watch it grow and grow, especially if you have a lot of time. Just make sure that you pick a good mutual fund that suits your investment objectives and criteria, and make sure that it gives you the exposure to certain market sectors or regions that you like. If you have questions on this, reach out to me through my website. Option number 3 is real estate. So real estate investing could be another really good way or option for you to allocate your $10,000. So $10,000 isn't exactly going to buy you a home to invest in, but you can still invest in real estate without physically buying property. And there are 2 main ways. The first way is through what we call a REIT, also known as a real estate investment trust, which is like owning a portion of an overall property. So you would spend $10,000 on a REIT or real estate investment trust, and that would give you exposure to a whole bunch of real estate companies. That's the first way. The second way in which you could invest your $10,000 into real estate would be through a real estate crowdfunding investment platform. One of the really well-known ones is a company called Fundrise. Now, quick disclaimer, I have nothing to do, or I am in no way affiliated with Fundrise. I just hear it's an excellent platform. I hear really good things about them, and the company allows investments as low as $500 into their e-REITs. Option number 4, and I'm only going to do this one in 30 seconds. I don't want to bore you, but you could also invest into something called alternative investments, things like art or antiques, precious metals. But I'd only do this if you really understand the risk and those specific assets. So they can really help you diversify your overall investments. But personally, I love art, but at this stage in my life, it's not for me. Don't know about you, but if you do invest into these types of assets, make sure you do your research. Option number 5 would be investing in cryptos. So Bitcoin being the most well-known crypto, of course, there's high risk, high return, but you need to ask yourself, does investing in crypto fit within your investment objectives and criteria? If you're comfortable with the risk, then yes, by all means, consider it. But if not, then I'd only recommend a very, very, very small portion of your overall assets be allocated into cryptos. So you can invest into cryptocurrencies through some investing apps. One of the main ones, one of the most famous and popular ones here in the US would be Coinbase, where you have the option to buy hundreds and hundreds of different currencies. The next module will be talking about stock investing, and the stock market will go a lot more in depth. But on cryptos, please be very careful. They are very, very volatile. See you in the next module. Welcome back. This is module 4, investing into the equity or stock market. So there are a few different ways in which you can invest into equities or stocks. And I teach all of this in depth in my full A to Z stock market course for beginners. So Your final option of how to invest your $10,000 is stock trading, which is one of the most common forms of public investing. And companies like Google and Microsoft and Apple and thousands of others issue stocks or shares on public stock exchanges if they want to expand their overall business operations for overall growth. So when you invest in stocks, you purchase a very, very small portion of ownership within that specific company known as a stock. Now, online brokerages like Fidelity, E-Trade, Robinhood, and countless others offer general investing accounts where you can buy and sell stocks. And most brokerage firms do not charge you any commissions to buy and or sell. So here are your stock investing options. Option number one, you can buy yourself an ETF. Now, an ETF stands for an exchange traded fund. And an example would be like a technology ETF or an overall S&P 500 ETF index. There are literally thousands of different ETFs. What are ETFs? So they are investment funds that pool investors' money together to invest into a group of stocks, right? So think of an ETF as a group of very, very similar companies all in one group. An example would be something like a technology ETF, which would hold perhaps 20 or 50 or even 100 specific technology stocks. So you could get something like a technology hardware ETF or a technology software ETF that only owns stocks within that specific criteria. So instead of buying just one or two technology stocks, you could just buy an overall ETF, which would give you the exposure to all the technology stocks within that specific ETF fund. So, as I said, there are thousands of ETFs. Some other examples could be oil and gas ETFs. You could get consumer ETFs or global consumer staples ETFs. You could get mining ETFs. You get the picture. So, now, both ETFs and stocks carry, a lot of risk, right? And you can gain and or lose value. But ETF investing is generally less risky than single specific stock investing. So if one stock in an ETF tanks or collapses, the overall group as a whole won't be too affected because that specific ETF may own 20, 50, or 100 stocks. But if you only own one or two tech stocks in your portfolio and one of those tanks, you have a real problem and you could really have a substantial loss. Now, very quickly, before we go on to option two, with regard to ETFs, if ETFs are for you and you want to invest your $10,000 into ETFs, I would really recommend dollar cost averaging into an ETF. This is also called buying in tranches. So what this really means is I wouldn't put the entire $10,000 into the ETF at once. I would phase it in over time. So, for example, maybe 3, 4, 5, or 6 months. So you could do something like $2,000 every month for a period of 5 or so months. That means that you deploy the money slowly as opposed to a lump sum into the equity market. So why phase in the money? Because you don't want to be buying into the ETF when it's at highs. Now remember, ETFs and stocks move like this. So if you phase it in over time, let's say 6 months or maybe even more, if you phase it in throughout this period, you'll end up with an average throughout the 3 to 6 months. But if you buy it all at once in a lump sum, who knows if you're buying it up here? That could be really expensive and then it comes back down, you'll be at a loss. You could be lucky enough to buy it at the bottom and ride it up, but to be on the safe side, I'd rather do dollar cost averaging. So if you're looking for high growth, ETFs might not be the best fit for you, but certainly a good option. Now, to find a list of ETFs, you can simply Google ETFs in a specific market sector that you like, and you'll see tons. But one company that manages a bunch of ETFs that are very, very popular these days are the ARK ETF funds, ARK. So check them out. Also, if you want to, you can email me and I will send you a list of good ETFs. Option number two, if you haven't already set up your own brokerage account, you could make use of what we call a robo-advisor. Now, what is a robo-advisor? A robo-advisor is an online broker where the computer that you invest in actually manages your portfolio based on certain algorithms. Now, the only job that you have when you invest with a robo-advisor would be to deposit your $10,000 and literally just answer a few very simple, straightforward questions about your risk tolerance. Now, after you set it up, the robo-advisor does the rest. They do everything on your behalf. It takes off all the stress from your shoulders when choosing different investments and managing your portfolio and worrying about losses and profits. Now, robo-advisors have become very, very popular among a lot of the younger generation and new investors. Think of robo-advisors really like a digital, automated platform driven by, as I said, algorithms with little to no human supervision. Now, they collect all this information about your financial situation and your future goals and through an online survey really, and it uses this data to offer advice and then automatically invest your money. Now, an example of a really well-known robo-advisor based here in New York City where I'm based is a company called Betterment. Now, the website is www.betterment.com. I'm in no way affiliated. I'm just giving you a recommendation. Option number 3, be your own portfolio manager and invest into reputable high quality stocks like blue chip stocks, not meme stocks. Now, some examples would be the likes of, let's just say, Amazon, Microsoft, some really large healthcare companies, some really large consumer staple companies. There's hundreds of high quality stocks out there, many of them that you know and use on a daily basis. Now, how do you find a stock to pick? In my course, again, I teach everything you need to know on how to pick good high quality stocks for the long term. Option number 4, a bit more high risk. Still being your own portfolio manager, you could do something like this. What you could do is a blend of, some tech stocks. You could do some small to mid cap, a bit more risky stocks. You could also do some crypto investing, and you could do some high growth stocks. Perhaps you like some electric vehicle companies that have really, really high growth. Now, this is obviously for much more long-term investing. And if you have time on your hands and you can stomach the risk, this could be the way to go. This is how I personally manage my portfolio, and I've seen excellent returns over the past number of years. Now, this is by far probably the riskiest from everything that we've discussed thus far, but the payout potential could be much bigger. Now, this is because you're placing a significant, amount of money within only a few different companies that you really like. It could be 5, 10, 15, 20 companies. And these companies you're really relying on to perform over the long term. So if you can stomach the risk and not trade with emotion, then this could be a great way for you to invest your $10,000. Option number 5, you could do a combination of the above. Now, I really, really like this option. So what you could do is something like this. You could invest a third into an index fund like an ETF or maybe a mutual fund. Let's say it's $3,000. Another third you could invest into some really high quality blue chip stocks, and the final third, between 3,000 or 4,000 or so, split it however you like from your total 10,000, could go into something like really high growth or exciting small cap stocks, or even a tiny allocation into some cryptocurrencies, maybe like a Bitcoin, or you could do something like half your 10,000 into a robo-advisor and the other half into high quality blue chip stocks. You could do, half into a robo-advisor and the other half into ETFs. Now, these are decisions I cannot make for you. You need to make these decisions. So, with that said, before we move on, don't forget to keep watching because I've got my top 10 investing tips, so stick around. But before we get there, I quickly want to run through the different types of investing because it matters immensely. You need to think about it when buying your stocks and deciding how to allocate your portfolio. So there's something called income investing. Now, income investing is investing in stocks that pay a really good or high dividend. Now, I go through all this in my course as well. You have something called growth investing, which is a bit higher risk, buying into companies that have a really high return of growth. There's a bit more risk involved, but the reward is potentially much, much higher. Then you have speculative or speculation type investing, which is more around the likes of small and mid caps. It's not highly recommended if you only have $10,000 unless you put a tiny, tiny portion into some speculative investments. Also, if you can stomach the volatility and the risk, then as I said, a very small portion can go into speculative investments. Now, I'm not talking meme stocks or penny stocks. Try and avoid those. unless you have a lot of capital to invest, which is a lot more than 10,000, then I'll say a tiny, tiny, tiny portion, but it's not for me. Try stay away from meme stocks. I'm trying to help you guys save. You will end up losing eventually if you keep trying to chase the meme stocks. So just remember not to sway too far from your investment objectives, meaning if you have a low tolerance for risk, don't invest heavily in things like cryptocurrency, which is obviously known for its high risk, high reward profile. Remember, depending on your personal circumstances and your own risk profile, you have options, right? You could deploy a portion of the funds into the equity market, keep some cash for emergencies. You could deploy some funds into stocks and some funds into the fixed income market, which is bonds, to spread out your risk. So you can see, these are decisions that you and only you can make. Now, if you don't know what stock to buy, start following some business blogs, read different stock market related news websites. I mentioned a few of them in my course as well, some of the apps that I really like. But also please check out my YouTube, where I put out what we call a weekly game-changing stock market news of the week. It comes out every Friday, and you might get some good ideas of companies to invest in. I don't actually make recommendations. I just talk about companies that I think are interesting and that have big news that is game-changing. So check out those videos. Right. My top 10 investing tips. This is module 5. So my top 10 investing tips. Tip number 1, do not day trade if possible. So try avoid swing trading as well. It's kind of short-term trading. Why? Because 9 out of 10 traders lose money. Successful investors do not try and make a quick buck. Remember that patience pays, so invest for the long term. Tip number 2, depending on your risk profile, if you can take on more risk, buy high growth stocks and look for capital growth. Now that's share price growth. Now you'll most likely find this in the tech or biotech space, an example, but biotech is usually very small cap, so be careful. Electric vehicle manufacturers now also offer really high growth, but also, yes, very high risk. Companies that are startups or new have a really high risk profile. So just be careful, you can lose your money. Tip number 3, if you are risk averse, meaning that you don't want to risk any of your capital, dividend income stocks are a really good idea. They generally are less risky and pay you an income in the form of a dividend. Tip number 4, do not get tempted by meme stocks and do not get tempted by stock forum chats. Please ignore all the rocket emojis and to the moon type stuff. No more needs to be said. Tip number 5, don't put all your eggs in one basket. Only owning one stock or 2 stocks overall with your $10,000 or whatever it may be is a recipe for disaster. I see so many people putting all they have into one meme stock. It's crazy. Do not do that. If you have $10,000, I would own anywhere from between 3 to 5 or maybe 3 to 6 or 3 to 7 stocks within your portfolio. If you have 20,000 or a little bit more, you could own anywhere from 5 to 15 stocks. If you have 50,000 or more, you could own anywhere from 10 to 30 stocks. Right, tip number 6. If you only have $10,000 to invest, remember, it doesn't stop there. Continue to add into your investment account whenever you can. You will build up your net worth much faster this way. Tip number 7, be patient. Invest for the long term. Remember, it's a marathon, not a sprint. This is probably the most important tip of all of these tips. Tip number 8, cut your losses and hold onto your winning trades. Yes, you can take profit along the way up, sell in tranches, so sell small portions of your overall position in a specific stock if it continues to trade up and you want to take profits and you get nervous. But cut your losses if you do not like a company that you own and the narrative has changed, and move on. Tip number 9, don't average into losing trades. If a trade is not going your way, don't throw more money at the problem unless you're totally convinced that the stock is going to turn around. Otherwise, it's generally a bad idea to put money into stocks that are already losing you money. Tip number 10, one of the best things you can do with $10,000 is to diversify your investments. In other words, take a few of the ideas above and spread out your money. Now, here's a bonus tip. Don't take money out of your investment account for any reason whatsoever, unless it's a complete and utter emergency. Now, that's it for this course. I hope you've enjoyed it and you've learned something. Please hit the like button and share this video and subscribe to my YouTube channel. Check out my website, www.stockinvestorstudio.com. Hope to see you guys soon. All the best.